Apologies for running a little bit late. Yeah, my wife and I, we've been marrying each other for some time. And one of our many wedding anniversaries was over the weekend.
Right
So
on.
had a
Nice.
very
Which one is it? Which number is this?
Number 1 of 7.
Oh, nice. Okay.
Yeah.
Of 7 years, right? You have been married longer than 7 years, right?
Yeah. No, we have been married together 7 times. So this is the very first time that we got married together. Yeah.
Yeah, this is the first anniversary.
Okay.
The anniversary of the first wedding. Yeah.
When
so you had 7 anniversaries. That is what that means.
When was let me be more specific in my question.
When was the last marriage?
When was the first marriage?
When was it? August 26th, 2006.
Wow. Okay. You're coming up on 20 years, bro.
Nice.
Yeah.
Wow. That's great. That is fantastic.
So what did you guys do? Did you guys grab dinner or?
Yeah, just had a mellow celebration. Michael was there for one of our weddings. I think wedding number 5, if I remember correctly.
Number 5 was the Vegas wedding with Elvis.
Yeah, it was Vegas. We got married by Elvis.
That was in 2019.
Oh
that was at your conference, Tom, right?
Oh, was it? Was it right after WCC?
Yeah,
it was right after WCC.
Right.
Yeah.
I'm glad that lots of people can do things around our conference. That happened. That was kind of a thing. So good to hear that, man. Yeah. That's rad.
And Mariano, how was your birthday celebration?
It was very good. I was telling Dominic and Michael, invited a lot of my friends. We had a nice food. It was very, very cool. Lots of fun. I hired. It's very funny. I hired a magician, and he never showed up. So it disappeared. That was a trick.
I mean, just magicians can be somewhat unreliable. So they come and go.
They come and go. Yeah.
They appear and disappear. So. Mariano, maybe the magician just missed the appearing act and did the disappearing act.
But he definitely did the charging me money act.
Oh, did he? He did the charging you money?
Well, I had to give him like a deposit, right?
How much money did he make disappear?
Nah, it wasn't much. It was 30,000 pesos, but still
Is that like $3?
No, it's okay. Don't be.
I don't know. I'm genuinely asking.
It's 350.
It's 351.
It's how much?
It's $40.
$40. Yeah, that's a lot of money in Argentina right now.
Yeah.
I mean, you mentioned a steak is $2, right? So, dude, that's like 20 steaks.
That's 20 steaks.
You got ripped off, bro.
It just disappeared. It was part of the magic.
You better get on Yelp and leave him a bad review, bro. Argentine Yelp.
Yeah.
Well, welcome everybody. Hope everyone had a great week, and it's good to see everybody. I know Mariano, you did your ski trip. Michael, does what Michael does and creates, little children's books with AI, right? VJ got married again. So Michael does it. Sorry, Michael.
With the action.
Anyways, so we've had an eventful week in the world of crypto and just the world overall. And so there was news of this crypto tax proposal coming out just recently. So I think it's kind of exempting blockchain or Bitcoin miners. I think that's one of the features of it. And I think we're happy with any proposal at this point. Now, it's not law, of course, and it hasn't even gone to a vote. But it sounds like there's going to be some review of it and voting within the next couple months. Who wants to take this one first? What do you guys think about all of this thing?
So what I've been reading is that this is essentially a new proposed way on how exchanges should be filing taxes and reporting information about their clients. it's like a type of unified form that allows, and not only allows, it forces exchanges to report differently how crypto taxes and transactions and volumes and all those things. It's something that it's, in a way, they already do today, because any United States compliant exchange has to report, I don't remember exactly which form, but they do have to report forms to the IRS or the transactions of their clients. But this will be a revised version of that. That is, well, more in depth, and it would, in a way, try to prevent people from evading taxes, right? I think, I mean, it hasn't been passed yet. It's just been proposed. But yeah, that's essentially it.
If it passes, doesn't that mean that like all crypto businesses that do anything with people's wallets will have to KYC?
Yeah. And that it raises a very important point, which is, we are always so happy about like regulation or getting at least some clarity. But I do feel that under like basically any type of clarification or regulation, there's a huge percentage of activities that are being done with crypto that will be essentially outlawed in a way. For example, certain types of currencies that do not give the level of details or the level of transparency that would enable it to comply with the regulation. I'll give you an example. Monero. If I send you a transaction on Monero, it's impossible to track. It's absolutely impossible. Even the NSA has like an open contract for anyone that can prove where does a transaction originate from. It has like $1 million bounty. So if it forces exchanges a more secure and tight regulation over what do they have to report from their clients, maybe some of these tokens might be banned from exchanges, because it would not enable the exchange to have the level of transparency required by the government.
Now you're speaking in reference to centralized exchanges, right? Because it sounded to me like on this proposal that there's also impact for decentralized exchanges. So,
yes.
So Vijay, do you have anything to say about that?
Yeah, so the proposal is a very well thought out proposal. It's about 300 pages long, that addresses the definition of broker. That has been something which is not very clearly defined. Who is a broker and what's the definition of a broker is. And the proposal includes certain decentralized exchanges if it ticks enough check marks, certain custodian wallet providers, right, which might include any wallet provider, and then also, obviously centralized exchanges to report on the taxes of the trading that is being done. And they have a new tax form. It's called 1099-DA for digital assets. It's a new form that is being introduced, and which then the outcome of the form is being able to track all the transaction activities for being able to buy and sell digital assets. So that is what is being proposed. The Joint Committee on Taxation actually estimates about $28 billion of taxes that could potentially be collected based on their internal calculation and metrics. And Dominic, as you pointed out, one of the group is decentralized exchange, and have to go through as to the specifics of which decentralized exchange, because there are a lot of entities that are decentralized. For example, DYDX, right? No, they are not actually a decentralized exchange. If you look at 1inch, right? 1inch is also not an actual decentralized exchange. But if you look at things like Uniswap, it's a completely decentralized exchange. And Uniswap has no idea as to all the people that are interacting with their liquidity pool. And it's going to become increasingly challenging for someone like a Uniswap or any of the other decentralized exchange to follow the guiding requirements.
Well, not only that, but okay, so you've got the exchange, right? They're going to be adversely impacted by this. But before it even gets to the exchange, it's entirely up to the wallet provider, right? Yeah. So if the wallet provider is not KYCing you, which no wallet provider is, like a Metamask or anything like that, they're not KYCing you. So how would the exchange actually even procure that data to begin with? Right?
Yeah, I mean, there are some technical solutions for how to do that moving forward. There could be a way in which only the whitelisted wallet addresses would be able to interact with these exchanges. That could be one potential scenario. And again, like now, the how needs to be figured out and implemented. And this is a proposal, and the Department of Treasury is looking for people to give them input. And once they receive the input, November 10th or 11th is the deadline. And once they receive the input, then it's going to get proposed and gone into a law. Even when it does that, they have until 2 years, right? Only 2025 will these reporting requirements go into effect. So the idea is to give these what they call brokers enough notice in advance so that they are prepared to be able to follow the regulation.
Interesting. Does our Canadian friend have any comments on this, on what the U.S. is doing?
Not really. I don't really have any major comments on this right now.
Well, I think what's interesting is that, okay, because I think there was another influential podcaster that was talking about potentially Metamask wanting to KYC or needing to KYC. I wonder if this is in line with that. And again, that this hasn't been substantiated or validated. We'd have to do a little bit further research on this. But there's a rumor that Metamask is going to have to KYC its users. So that would fall in line very much with this proposal, because if Metamask is requiring KYC, then they could actually determine who's actually using it and, issue the 1099 DA and have all the exchanges do all that stuff. Now, I know that this isn't what us, crypto purists want, us decentralized finance purists want. I just wonder if this is really inevitable, guys. Like, what do you guys think about this? Like, are we talking that if we're going to use DeFi, if we're going to play in this game over the next coming months and years, that there's going to be no way around having a KYC?
So I think it's good to notice and to have in mind that the tools that we have today, they can change. So let's take the point of MetaMask, right? MetaMask is owned by a company, well, so it's actually acquired by a company called Consensus, which is a very, very important provider of technology and infrastructure on the Ethereum space. For example, they do most of the RTPs that connect the different, like, how do I say this? It enables the blockchain to connect to your MetaMask, right? Essentially that. And one thing that they've done in the past is that those proxies, those RTPs, they banned the use of Tornado Cash. And why they do that? Well, because Tornado Cash was blacklisted by the United States government. So if you were interacting with them, it was a big no. So Consensus, I'm not sure if they were forced or they just did it preventively. They banned all the RTPs inside MetaMask to connect to the Tornado Cash smart contract. So like, no one expected that could happen, because we always repeat and keep saying like, hey, smart contracts cannot be banned, all the things cannot be like blacklisted, and then that happened. I am highly uncertain, and I don't really believe that the KYC will be done. I think it would be like a little bit what Ledger did, that they said, hey guys, now there might be a backdoor to your device if you don't use it, and that would essentially kill MetaMask. But I do not like close my mind against that possibility. I think it's very, very unlikely, because if you require a KYC, you are in a way saying that you can prevent people from accessing their wallets if they don't complete the KYC, right? And that, I mean, technically today it's not possible because you hold the private keys of your own wallet. And even if they make it, if they, for the people that do not know how to export their wallet and they make it like mandatory, I think it will be like the end of MetaMask in a way. But those are just my thoughts.
Right. People will just take their private key and pack up their bags and go to the next wallet.
Go to my Ether wallet and just, export it there.
Yeah, the good old days.
I have a different take on it. I don't think, that might be more of a short-term thing, but for a long-term basis, if you want this industry to be a legitimate industry for people to be involved, it needs to follow all the tax regulations, the guidelines, like any other industry, right? For the industry to have more staying effect, it has to follow the rules. It has to have like some strong regulations that can protect investors, and at the same time, it needs to have flexibility to allow innovation. So that's a very fine balance, but that's the long-term impact that I see, and it's a case for every country, right? We saw it happen in Japan. We saw it happen in other countries, like EU just passed a regulation. So as the industry matures, it needs to have clear regulations, clear guidelines on this is how things are defined, and this is how things are going to be taxed. And crypto is not different from any other industry. The how we get there might be different. I don't believe that the situation that Mariano suggested, that people might just go to some other wallet, that is just a cat and mouse game, meaning that it'll get shut down really quickly. The example with Tornado Cash, right? When they came out and said that people cannot touch the wallet with Tornado Cash, then none of the exchange touched it. And once a particular wallet address has been blacklisted, so to speak, it's going to be very challenging to move money from that point forwards. If it can be done for blacklisting, I feel like it can also be done for whitelisting. So it is just a matter of time before things are stabilized, and we need to have clear guidance of how these assets are treated and how they are taxed.
I just wonder if, from that perspective, BJ, if there's a way to also have the cake and eat it too, meaning, okay, the government surveillance agencies get what they want, but there's also a preservation of privacy, right?
Yeah.
So, because I mean, the whole reason many of us are in this industry is because of that privacy, right? It's the only way we can, not your keys, not your crypto. It's the only way we can really own our own asset and do so in a private way where nobody can mess with us. And so I'm wondering if there's, maybe through zero knowledge proofs or any of that kind of stuff, where the government agencies get what they want, right? They can verify transactions and all this stuff, but they don't necessarily have full access to who it is on the other side that owns it, right? In other words, they can't just track all of our transactions. They can't know that I'm buying a pack of chewing gum, that I'm the one buying it because, hey, I might want a pack of chewing gum. You can't tell me that I can't have it, right? And I think that's the big concern with CBDCs. I think you said in a prior episode that, hey, CBDCs are going to happen. So if that happens, then that opens up a whole Pandora's box of privacy concerns. So I'm just wondering, is there a middle ground that both sides can be satisfied with, or is it just going to be, right, a fiat system 2.0 only on a digital blockchain?
Yeah, so there is a difference between like what we claim as privacy and what is claimed as the private keys of what we own as an asset, right? So there is property rights are essential, fundamental for any capitalistic society. For the economy to operate, we need to have fundamental property rights. If we don't have property rights, then economy cannot grow, and we cannot build. People cannot trust it. That's why the U.S. economy, couple of other developed economies have the fundamental property right, which is if you own something that is yours and no one else can come and take it. So what the current proposal is not being able to track what people are buying, how you are spending your money, whether you are buying chewing gum or Starbucks coffee, or for any of the other infinite varieties of legal ways in which you are going to be spending money. I think the proposal is mostly around being able to have a proper guideline for reporting these taxes, right? So we want to make it easy for people to report their taxes, And it's not easy for people to report the taxes because the definition is not clear. If you make a transaction, do you have to report it? You're not reporting it. So the main intention of the proposal is to bring clarity for when you need to kind of report your taxes, what are the conditions, how you're going to go about doing that. And that's the primary intention for the 1099 DA form. And obviously, right, like now, whenever we are giving any information, there is some amount of lack of privacy. And the Fourth Amendment, right, which guarantees our privacy, has actually been gone out the window for years now. We had and it happened without any discussion, right? There is no discussion. No one was up in arms, literally speaking, as to what happens if there is a change in Second Amendment, right? The Fourth Amendment was completely changed. And it was done in a way where we did it without having any kind of discourse about it. So that is around the privacy side, whereas around the law side, make it easy for everyone so that you're very clear as to what needs to be filed for taxes and how they're going to go about doing it. That will make so many people's life easy.
Yeah, I appreciate that. Thanks for unpacking that. I think the unfortunate thing is you're right about the Fourth Amendment. I mean, we've that thing has been stomped on for multi decades now. And
I think
the unfortunate.
Sorry.
I was just going to say one last thing is that the unfortunate thing is that we, as a citizenry, have pretty much given up our demand or need for privacy in exchange for being more efficient, right? Making things more easy for us, right? So that's my final comments on it. Unless Mariano, you have something else to say.
No, just a quick thought that I had, which is when BJ, when you were explaining that eventually cryptocurrencies will be regulated, and that would mean that it would be also regulated on a blockchain level in a way with what you planned of the blacklist and the whitelist. Even though I don't agree with the viability of the blacklist and the whitelist over the long term, let's, for the sake of the argument, let's think they would work. Having that effect would need like a globalized effort on having the same rules, in my opinion, because I think that you perhaps you're viewing it from a United States centric approach, when there are multiple other regulations that do not have the same like taxation like but taxation problems that crypto has, whether it's a security or not. There are other nations that they have already stated it is or it's not, and they have already stated their rules. So I'm thinking out loud, how would like regulation on a software level, right, on a blockchain level would work with so many different understandings on a global level of what is allowed and what is not allowed.
Well, I can add there what BJ, if I can say real quick, is that what's interesting right there, Mario, is that's part of the concern that I have as well, because you essentially have two growing factions in the world right now, right? You have, G7 countries or NATO or whatever, G7 countries, and then you've got, BRICS, right? And, we're not going to agree on much in those two factions. So not to mention crypto, right? So you could end up having this kind of arbitrage, where a certain jurisdiction or a certain country really attracts more people who are more privacy centric. But versus it's the same thing on a state level from a tax perspective, but now you've got it regarding a tax or even a privacy centric level from country to country to country. So unfortunately right now we don't really have a lot of visibility on what those countries are planning to do or doing. But I think you're right over on a general scheme is that, this could be a mess, an absolute mess from, jurisdiction to country to country to country, all having completely different paradigms and legal structures for this. It could get messy really, really fast.
Yeah.
Hey, and also, I'm not supporting this, by the way. I don't support it, and we still don't know how it's technically feasible. But if you look at what happened specifically in the case of Tornado Cash, right? When they had the Axie Infinity had this Ronin update, and about $625 million. My memory is might be off at this point in time. Some amount of money was stolen from it, and the Treasury Department came and said that it's most likely hackers from North Korea who are working on it. And OFAC, the Office of Foreign Assets Control, right, OFAC, they issued a statement saying that, hey, here are 40 or 50 addresses that have been involved with this particular hack, and none of the US entities should touch it, right? And now we have enough of a way, at least from an exchange perspective, once the address goes through, none of the exchange would touch it, whether they are US entity or not. And with that, right, like those 40 or 50 addresses, the money is still staying there. It hasn't moved at all because it's sanctioned by the OFAC. Once it's sanctioned by that, then they wouldn't touch it. So similarly, you could do it for others, but that's going with the blacklist model, where you can say, hey, here are 40 addresses. Only touch, don't touch these 40 addresses. And what I mean by the whitelist is by saying, hey, here are some 100,000 addresses, right? All the exchange that needs to deal with can deal with these 100,000 exchanges. I'm not sure what that looks like. And I personally, I'm all about freedom and for giving people control, and at the same time make people's life easier, right? If it can make people's life easier, then let's go ahead and implement it. As in the case of, okay, how do I make it easy for me to be able to file my taxes, right? Just make it easy for me, or make it easy for any of these exchanges to be able to participate in the ecosystem. So that's why I see the industry evolving and going to a certain way. And what does it mean for being able to do KYC AML? That can differ, right? There are different levels of KYC AML that needs to be done. And maybe there are some tests that needs to be taken for people, for them to demonstrate their financial knowledge, right? So the test right now for whether you can have access to a lot of interesting investment opportunities is whether you're an accredited investor, right? And the way that you are determined to be an accredited investor is based on your net worth. If you own $1 million of asset outside of your primary home, then you are considered an accredited investor. Now, this rule was written back in 1930s, right? It's a 1934 law. What it meant for $1 million back then, it's completely different for what it means to have $1 million right now. However, the law is still the same. I know of many sophisticated investors who understand the market very in depth, but they are not accredited investors because of how this particular rule is mentioned. And there are a lot of people who qualify the rule for being an accredited investor, but they have absolutely no knowledge on the financial industry, and they should not be playing in crypto at all, let alone DeFi. So we need to have some other criteria and rule that defines what it means to be able to operate in a space. And I'm not sure how close we are to having that level of clarity.
Yeah, I'll second that, Vijay, as we put a bow on this discussion. But I think that the whole, accredited investor guidelines and rules set is a poor proxy for a level of sophistication to determine the level of sophistication of an investor. So that being said, there's great discussion on this. I think that we'll be monitoring this over the coming months as, if this proposal actually gets some steam. Maybe it goes to a vote. Maybe things go back and forth. It gets revised a time or two. But next topic is actually some news that just came out very recently, which is the SEC, in their infinite wisdom, has come after a NFT creator in Impact Theory in Tom Bilyeu, who is a very, very prominent podcaster, YouTuber, has enormous size and audience. And I think some of us have known him and met him. But in that lawsuit, they believe there is a fine. I think he's already paid the fine, already been negotiating with them. But I think there's some comments or there's some opinions on this subject specifically, and there's some potential impact on the broader broader space overall. So who wants to take this first?
Yeah. So we are witnessing something important because this is the first time in history that the SEC goes after an NFT and considering it a security. It's really like the first time this has happened. Previously, the SEC did not make any comments on regarding if it was if NFTs were securities or not. According to what they say, is I'm trying to find the right information. Is what happened is that Impact Theory, they allegedly raised almost $30 million between October and December of 2021 when they were doing the sales of their NFT collection called Founders Keys, which were offered in like 3 different tiers. According to the SEC, the company encouraged potential investors to view the purchase of Founder Keys as an investment into the business. And they said that Impact Theory emphasized that it was trying to build the next Disney. And if successful, it would deliver tremendous value to Founders Key purchasers. So that's what the SEC is stating. So according also to the SEC, the company was ordered to pay a total of more than $6.1 million in disgorgement, prejudgment, interest, and civil penalty without admitting or denying the agency's finding. So that's quite interesting. One last thing that we need to address is that there were actually 2 dissidents from the SEC commissioners that objected this ruling. So you have Hester Pierce and Mark Uyenda, that essentially they stated that the NFTs were not shares of a company and did not generate any type of dividend for the purchases. And they also added that they do share their colleagues' worry about the type of hype that entices people to spend almost $30 million on NFTs without having a clear idea about how they will use or enjoy profit from them. And that is a legitimate concern to them. However, it's not a sufficient basis to pull the matter into their jurisdiction. So, like every single day, the SEC is more confusing, and it's quite funny because they stated that the NFTs, according to the SEC, were in a way selling of a security because it can reward the purchasers of the NFTs if it goes very well. Then they give them a fine that they have to pay even if they don't agree or they don't state that it was and indeed a security. And then you have 2 SEC commissioners that they state, no, we actually disagree with this. So every single day the SEC is more funny and more funny. And yeah, it's quite the shocking news.
Well, I think this is more confusing, Mariano, because I don't think there's unity in the SEC. I mean, you can kind of see it in the press release right there, right? It's like you got 2 commissioners that are raising their hand saying, I don't agree with this. And one of them is Hester Pierce, who is someone who is, I guess, more if we could term crypto dove, someone who's more dovish on the space than, say, Gensler himself. So this to me kind of gives an indication that there's not unity inside the SEC.
There's no consensus.
Bingo.
Yeah. I bought one of those NFTs. And yeah, it's because he said he was going to be the next Disney. He was the first major brand name coming into the NFT space. And so it made sense to go in on that. But it's interesting. So the SEC basically slapped him on the wrist because they promised profits to NFT holders at the launch, but in practice, they're not giving any dividends and they're not planning on doing anything as such. So it's really not considered a security in that regard. But what they meant by, like, you know, the holders gaining value by buying this NFT probably means, you know, perks within their ecosystem. You get to get first dibs at trying out a game, or you get a special item, or you get access to partnership wearables, stuff like that is like the value that they might be talking about within this Disney world. And that's going to be something that's highly sought after. And maybe secondary markets will be created where those things get sold. And maybe some OGs will make some money for going on that journey. But there's a lot of hoops to jump through before you get there. Building stuff takes time. That's what I would say.
VJ, were you aware of this? Because this was relatively recent news.
Yeah, I wasn't aware of the sale of the NFT, so I'm not sure what was said to sell the actual NFT and whether something is a security or not. Right? There is a Howey test, and Howey test determines whether something is a security or not. And based on what Michael just shared, if they had promised dividends to be distributed, then it typically fails the Howey test, so it will be a security. And also going back to our discussions is we need clear regulation, and the SEC is trying to kind of clearly define something by going after each and every one of these projects on an individual basis, whether it's against Ripple or whether it's against Impact Theory or against Coinbase. It doesn't give a complete understanding, right? It's like trying to the old metaphor is 5 blind men trying to feel an elephant to figure out what an elephant looks like. There is not a bigger picture, holistic view of, if I am running a startup company, I don't want to violate any laws, but tell me the rules, make it very clear as to, okay, what are the rules that I need to follow for being able to distribute these NFTs, right? For being able to do it in a way that is very compliant. And that's why there is another regulation, we talked about it, Dominic, before, that is being passed, which would be a ground up way of being able to define it. The Congress comes in and says, guess what? Rather than trying to establish the law with all these one-off lawsuits, SEC versus people, how about we come up with a new set of laws, and that will be guided and regulated and defined by the Congress rather than SEC or FTSC or any of the other regulatory bodies. Rather than them doing it, the Congress is now proposing a way for being able to have these laws that are built from the ground up, that has clear definitions and brings more clarity into how we can go about interacting with these technologies.
I mean, I just think that this, I completely agree with you on that, BJ, and thanks for kind of sharing it that way, because it's like saying, it's like the FBI putting the FBI in charge of creating the laws, right? On the run. Yeah. Like, you broke this law and now we're putting you in handcuffs, and that there was no law to begin with, right? And so that's tantamount to what's going on here, right? And it's just a complete reactionary, tail wagging the dog situation that is and that we've had it for years after years. I mean, we've been waiting for some kind of framework in place to, now, not suggesting that what Tom Bilyeu did and what Impact Theory did was, they could have registered as security. They could have maybe complied with a rule set, right? Which I know a lot of people or organizations that are doing, they're preemptively complying with things that they think are a little bit more stringent and strict, and doing it that way to kind of make sure that they don't get a slap on the wrist like what Tom got. And I don't want to call it the $7 million a slap on the wrist, but I think it was maybe more of a slap on the wrist, comparatively speaking. I just wonder what this does in the near term and long term as an impact to NFT creators, communities, the space in general, and even Tom and Impact Theory, because I know he's a steadfast proponent of the space and Web3. He's got an enormous following, and he's been one of the main voices out there in I should say the personal development, podcast space that has really attracted a lot of attention into this space, which I think is a net positive. So I'm just wondering what this all means for him, for Impact Theory, and for other content creators that would come in and do something similar. So that's my only concern about this in the near term.
Yeah, no, the SEC just fined the $6.1 million that Mariano pointed out, but it doesn't give any clarity, right? Like, someone violated the laws, but if I'm a podcaster and I want to be able to tap into my community.
You are a podcaster, BJ.
I am a podcaster and I want to tap into the 42 people who have subscribed.
We should not sell NFTs. Just in case.
We hit 50.
Let's do it. We're going to do our launch. We're doing our launch.
Yeah, being able to participate in the ecosystem, being able to provide some special access, supporters. What are the laws that I need to follow? That is not very clear. So agree with you, Dominic. That's a great metaphor of the FBI arresting people. That's a really, really great metaphor of what's happening right now.
Yeah, it's a tail wagging the dog thing. So I know that this is not a serious topic. So onto a more serious topic, which is your OnlyFans. OnlyFans is now their parent company is now apparently investing in Ethereum. So I don't know if this means that we need to go support OnlyFans that are supporting us, right? Us ETH holders. So what do you guys think of this? Does this mean anything? Does this mean this is a new spark of a bull market? What does this mean?
Yeah, that's exactly what I think. I think events like this are the types of events that spark bull markets. So I'm pretty bullish overall on the move. I don't think it means the bull market's here, it's coming tomorrow, start putting all your money in. But I think it's one of those signs where like the dominoes begin to fall. It's a huge vote of confidence for the space, and beyond that, I think it really it's an opportunity for people to be educated about crypto who weren't previously thinking about it, because a company like OnlyFans is pretty popular, it hits the headlines, and now everyone is sort of wondering what's up. So I think that's really positive. And I think that's the reason it kicks off the bull market, really, is because of people becoming curious because of these big headline events. And so that's why I think that.
Awesome. Michael, what do you guys think?
I don't think.
What is OnlyFans?
BJ, we know dude. I know you've been married 7 times.
I subscribe to your OnlyFans, BJ.
I mean, I don't think it's that big of important. Macroeconomically speaking, it doesn't move the needle at all. I think they invested something like $30 million, if I'm not wrong. It's not important, but it's a funny thing. I think it's more of the. I believe I read that the founder of OnlyFans is this like crazy dude that is like super eccentric and does all these type of crazy things. So I'm sure like one day he woke up and he's like, yeah, okay, I'm convinced into this Ethereum thing. And he put a little bit of OnlyFans money on it.
Yeah, I agree. I agree with that. Like I said, dominoes begin to fall. So it's exciting that someone like that, who is so crazy and grabs so much attention, is putting the spotlight on Ethereum.
Awesome. BJ, you got any comments on?
Yeah, so the original founder of OnlyFans actually sold it to another person. I think Leo is his name, and he's very secretive, right? Very private. He used to run a campsite, and he really took OnlyFans and put a lot of marketing muscle behind it. OnlyFans did like 5 billion in revenue last year, and 20 million out of the 5 billion is very small. And I don't know the details of the particular sale, but maybe if they had enabled crypto payments, because they have been having difficulty finding a credit card payment processor, if they'd experimented with it, like 20 million out of 5 billion, it's a very small amount. It is less than 0.1% of their revenue. Maybe it came in from their enabling payment. As Ethereum, their holding actually reduced from the year before, so they'd actually gone and sold some of their Ethereum. And Leo is a very big proponent of cryptocurrency. When Vitalik launched his book, right? He was one of the people, or his wallet was one of the wallet addresses that had bought the Vitalik's book. And got an NFT from it. So he's very much involved in the crypto space, and $20 million is a small amount compared to the overall revenue of a company like OnlyFans.
Yeah, personally, I think it's I kind of agree with Michael. but I also think that it's going to take several more of these type of events for it to really kick something off, right? I think that this by itself in isolation, I don't know as if it might be a nothing burger, but this in the context of if we see a half a dozen similar type experiences or headlines over the coming weeks and months, those in totality, I think end up having a larger impact. Although it can't hurt as far as brand credibility and all that kind of stuff or awareness, for someone in the OnlyFans as big as they are, for those users to be like, oh, well, what's Ethereum? So they start looking into it, right? And perhaps maybe it leads to more investment into the ecosystem. But by itself, I don't know as if I kind of agree with Mariano on this. I don't know as if it moves the needle too much. But in totality, if we get in context of more significant, if all of a sudden Salesforce then announces, okay, well, we're going to invest $100 million into the Ethereum blockchain, great, right? That would be massive, right? So I think that's possible. I just, and I think it's important to consider it in context. But speaking of, there is another actual interesting point or news headline that came out recently, which Western Union is embracing the Ripple blockchain and XRP token for enhanced money transactions. So Western Union coming into the space, which, Western Union is one of the first companies to actually be disrupted by this technology. So them actually, kind of partnering with, if I can see that appropriately, seems interesting. Now, why they use Ripple, XRP, whatever, let's maybe that's up for debate too. But what do you guys think about this? Is this thing maybe even more significant than what we just talked about regarding OnlyFans?
There was actually talks a couple of years ago of Ripple buying Western Union, and there was another Western Union competitor. I forgot the name, and Visa was actually making a bid for it, but nothing came out of it. They weren't able to come to agreements around the pricing side. So Western Union makes great sense for them to do something which is cross-border, right? They do cross-border trades day in and day out. We saw what happened with JP Morgan. JP Morgan, they launched their own coin, JPM coin, to be able to settle in between the various business divisions within JP Morgan. So that was a huge efficiency improvement. And for someone like Western Union, it obviously makes sense. Using Ripple itself, I have my own doubts around it. The Ripple technology might be great. However, if for people who are trying to buy the Ripple token because of the announcement of Western Union, I would caution against them, because the Ripple network can be used entirely without having to use the token at all. And the Ripple team have done a great job of marketing, and they don't entirely disclose this, which I think is not beneficial for potential investors or the token holders of a Ripple token. And so, yeah, be cautious. Look at the technical capabilities of what Ripple network can and cannot do, and do your own research first before using this news to invest in or buy Ripple token.
As always with BJ, very sage advice. Mariano, Michael, do you guys have any comments on this particular story?
Nah, I haven't been following Ripple too much.
Yeah. Gotcha.
I've been so knee deep in playing with AI tools that I almost forgot about crypto this week.
I mean, you wrote a book. You're an author.
I did write a book.
You're a published author now.
Link in the description.
Yeah, it's link in the description. And meanwhile, everybody, make sure you like, subscribe, and comment. Give us some feedback. We read all of your feedback. Love to hear it. Love to think of know ways in which we can improve, topics we can cover. But with that, yes, that's this week's edition of the Bitbrain Podcast. So
cutting it short this week.
Yeah. So welcome everybody, and you guys all have a great week. Mariano, VJ, and Michael, great to see you guys. And until next time.
Toodaloo.
Take care, everyone.
Okay. Bye, everyone. See you next week.